Mortgage lending is heavily regulated to protect you and the financial system. We're in an environment where mortgage fraud is actually at an all-time high. So that requires extra scrutiny of documents to make sure that everything is compliant with underwriting guidelines and is following the rules that are in place so that you have a good mortgage and the lender also ends up carrying a good mortgage as well. We collect documents to verify your income, your identity, your assets, your debts. And we are not trying to make the process harder. We're trying to make sure we have a rock solid file for you as it goes into underwriting. Oftentimes, when we ask you for documents and you send them in and then we send them into underwriting, it creates additional documents that we need to ask you for. For example, you might have had a $7,000 non-payroll deposit in your last bank statement, and we had to get that bank statement to show that your due diligence money had cleared, but then we also see the $7,000 deposit, which was not from payroll. We are going to have to ask where that $7,000 came from and make sure that we document it, because any assets that are coming into the transaction while it's in process have to be accounted for, and we have to make sure they're from allowable sources like gift funds, etc., and not from loans and things like that. I promise if we asked you for a document, it's not because we're sitting around with nothing better to do than to ask you for one piece of paper after another. There's actually a real reason behind it, and it's to make sure that both you and the lender have a solid, proper loan in place and both parties are protected. If you're ever unsure why we're asking for a specific document, just ask and we'd be happy to give you the explanation. I'm Barb Multari with Pathway Mortgage Group, and we've helped over 3,200 people and families purchase homes, and we would love the opportunity to work with you.